Hi, good morning. This is Ian Mendelson, and I'm going to be going over some of the strategies that I've been using VantagePoint for to be making consistent, successful trades in the markets. I trade a combination of options and buying equities, and what I've done here with VantagePoint is on the left-hand side over here, you'll see that I've set up several portfolios. The first four portfolios are actual trading accounts that I'm actively trading out of. They may be a traditional IRA account, a rollover IRA account, and just a regular trading account. Underneath that, I've set up a portfolio for each of the various sectors. When I'm looking for a fresh new opportunity, what I want to do is identify which sectors I'm looking for movement in, momentum in, and then looking for the best stocks in those specific sectors. So I've set up one portfolio for each of the various sectors: basic materials, capital goods, conglomerates, so on and so forth. This is what we call the market tree, and this is where, as you know, as a VantagePoint customer, you're going to be looking at and opening up your VantagePoint charts and putting them into your portfolios. I've got quite a number of different portfolios here. Okay, I'm going to go ahead and hide the market tree and make this chart a little bit bigger. One of the most heavily traded stocks out there is Apple, and it's a stock that I have done extremely well in trading options, both to the up and down side. As a VantagePoint customer, what we're looking for is a fresh crossover between the blue and the black line. The blue line is the predicted proprietary moving average that has really all the complex analysis involved in it. To generate that blue line, VantagePoint is looking at Apple, the stock that we're forecasting here in this case, and 25 other related markets that are influencing Apple the most. The black line is just a regular moving average, and we're looking for a crossover. So as you can see here, at the end of September, the blue line was above and crossed below the black line, predicting that Apple was going to start going down, and that's when Apple was around $700 a share, $690 a share. So this was a phenomenal opportunity for anyone to be able to buy an option, buying a put option to ride this market down. And I keep my option trading very simple. I'm looking for a put or a call. In this case with Apple, because it's priced so expensively, I'm not typically buying shares. I'm more commonly trading options on Apple. And what you'd want to do is buy a put option when the blue line's crossed below the black line. Now, you don't want to wait too long, because after the blue line crossed below the black line, you can see that this market came down very quickly. It was already around, went down maybe $40 or $50 a share after several trading days. So you really want to be able to take advantage of the fresh crossovers as soon as they happen. Underneath here, what I'm looking at is the neural index. The predicted neural index is either a 1 or a 0. And if it's a 0, it's indicating weakness. So in this particular case, where the blue line has crossed below the black line and the neural index is at a 0, that's confirmation giving me the confidence to realize that I want to make some money here by buying a put option on Apple and riding this stock down as far as it's willing to go. As long as that blue line doesn't cross back above, it touches here but it doesn't cross above, as long as it stays below, I know that this stock should continue to plummet and go down, since the software is consistently up to 86% accurate. And I've used it for so many years that I'm very confident to use these predictions and execute my trades based on them. Even though the software is doing the complex analysis and the software is doing a very advanced type of analysis that I'm not able to do myself, that being said, there are certain circumstances where my common sense is being utilized as the final say on whether or not I actually want to execute the trade and take it. So VantagePoint's providing me with opportunities to find profitable trades. I'm the trader, and based on my risk tolerance, based on my common sense, and maybe even other factors or other charts or software I'm looking at, I'm going to make the final decision on whether or not I want to pull the trigger and execute the trade. So there are certain circumstances that even if you see VantagePoint predicting a very nice profitable opportunity, you may want to pass on it if it doesn't meet your personal criteria. Now, some of the criteria that I've set for myself are if I know for a fact that the Fed has a big announcement coming out in the very near term, whether it's later in the day or tomorrow, I'm going to be very cautious. In fact, if I believe it's a type of announcement that traders are anticipating, that's going to manipulate the market before the announcement, as well as have a very sharp reaction immediately after the announcement is made. Same thing goes if the president is speaking, having a press conference, or announcing something that will directly impact what the financial markets are going to do, especially if it's involving a particular sector or a set of stocks that I'm considering trading in. I'll just completely stay away the day before, the day of, and even the day after, just to make sure that I'm not having collateral damage from manipulation from those announcements, but instead I'm utilizing the accuracy from VantagePoint identifying these trades. World news, natural disasters, they cannot be predicted, and that's why nothing will be 100% accurate. But if you make yourself a promise that you're going to trade conservatively, that you're going to stay on the sidelines during such events or such news announcements, you yourself can miss a financial disaster. And I think you have to have a game plan, which is very important, in addition to having the right tools and using VantagePoint to help you trade. Another example of using a little common sense in addition to the software is being very careful when trading immediately before or after a national holiday. I think we had the most recent example of both of those cases happening when you had the fiscal cliff, all the hype leading up to it, and also you had New Year's Day and the end of the year. So that was a time period, and I'll show you that on the chart here, where I really needed to use my own common sense and make my own decision regardless of what the VantagePoint crossovers were indicating. So here I have a crossover, and this was at the very beginning of December. You could see down here the date is November 30th. That was this trading day here. So at the very beginning of December, VantagePoint was predicting that Apple was going to start going down. And Apple was being traded around $565 a share to $575 a share around that time period. And that's when VantagePoint predicted that Apple was going to take a very nasty turn to the downside. And you can see that by not only the gap between the blue and the black line being very wide, but you can also see that by the neural index consistently being a 0, which was a clear indication that this market is making a turn and it will be going down very strongly. Now, as I told you about national holidays and news events such as the big impending fiscal cliff, which happened right here, this is December 31st. If you were in a short position, if you had puts on Apple, and obviously you would have been making quite a bit of money because it came all the way down to $510, you can see here that on December 31st, the last trading day of the year, Apple went up significantly in that one trading day alone. It went up over 4%, about $20 per share. It then had a gap up the next day, the following day in the new year, but immediately started to drop and go back to the original trend that was already established back here when VantagePoint predicted that Apple was expected to have a strong downward underlying trend. And the 9 days, the first 9 days of January, Apple went down almost 10%, a little over $50 per share. And if you were simply doing nothing more than acting as if you are a robot following these crossovers, yeah, you could have shorted Apple making money, but then you probably would have ran into some trouble here. Even though VantagePoint then did give a crossover to the downside around $520 a share, and today, right now, as I'm recording this, Apple is being traded around $488, that would have still been an extremely profitable opportunity. You want to avoid instances where you could have had some whipsaws or had some losing trades. No one's going to be able to eliminate all of their losing trades, but the more you can stay away from risky trades that have the potential of being a losing trade, and that you could be conservative and identify high likelihood profitable trades, you're really stacking the odds in your favor. So this is a perfect example where VantagePoint was extremely accurate on this huge downward trend. It was able to identify the strength in the market leading up to the end of November, and it did predict at the very beginning of December that Apple would go down strongly. I personally wasn't fooled by this crossover because you had a national holiday simultaneously with the fiscal cliff announcement, which did nothing more than make Apple in 2 days skyrocket before resuming the downward trend that VantagePoint predicted at the very beginning of December. So thank you very much, VantagePoint, and this is a perfect example of using the VantagePoint's powerful forecasts along with your common sense so that you could avoid some unnecessary mistakes but take advantage of the predictive accuracy of what we have in front of us.